Today, we're diving into a topic that might not always be at the top of your mind, but is crucial to understand if you're living in or planning to do business in Germany: the German tax system. If you think taxes in your home country are complicated, wait till you hear about the intricacies of the German tax code. From numerous deductions and allowances to various types of taxes, the system can be both bewildering and fascinating. Why should you care? Well, if you're a resident or you run a business in Germany, understanding the tax system can be a game changer. It can mean the difference between a hefty fine and a hefty refund. Curious yet? Stay with us as we unravel this complex yet essential subject. Trust me, you won't want to miss what's coming. When we talk about taxes in Germany, we're not talking about just one type. The German tax system is multi-layered and includes federal, state, and local taxes. Let's start with a quick rundown of the major types. First off, we have income tax. This tax affects anyone who earns money in Germany, whether you're employed, self-employed, or a freelancer. Next is the corporate tax, which is critical for businesses. Then there's the value-added tax, or VAT, a tax on goods and services. But wait, there's more. Germany also imposes a solidarity surcharge and a church tax. How do these differ from federal taxes? The federal government collects some, while others are local, adding another layer of complexity. Interesting fact to chew on. Germany has one of the highest tax to GDP ratios in the EU, around 37.5% according to the OECD. So yes, taxes here do pack a punch. Let's dive deeper into income tax, a major area affecting individual taxpayers. If you earn money in Germany, you will be subject to this tax. And here's where it gets interesting, or complicated, depending on how you look at it. Income tax rates and brackets. You'll find these differ based on your income level. The rates start at 0% for the lowest earners and can go up to 45% for the highest earners. It's a progressive system, meaning the more you earn, the higher your tax rate. Another crucial aspect is the tax classes. Germany has 6 tax classes, and which class you're in can affect your tax rate significantly. These classes consider factors like marital status, having children, and being a single parent. Don't forget the allowances and deductions. These can make or break your tax bill. Common deductions include expenses for health insurance, pensions, and even certain work-related costs. All these factors add layers of complexity, making it essential to either educate yourself thoroughly or consult a tax advisor. Next up is the corporate tax, vital for anyone running a business in Germany. The corporate tax rate is generally around 30 to 33%, which is relatively high compared to other European countries. Now, this tax doesn't just apply uniformly. There are nuances. For instance, an LLC, or GmbH, is taxed differently from a partnership or freelancers. The type of business structure affects your tax obligations and benefits. That's why choosing your business structure wisely can have long-term financial implications. On top of that, corporate taxes affect a company's operations and profitability. High taxes can put a squeeze on profit margins, but understanding the system well can help you optimize your tax liabilities, keep more of your earnings, and reinvest in your business for growth. Let's move on to a tax that affects both consumers and businesses alike: the value-added tax, or VAT. This is a consumption tax placed on goods and services. So, every time you buy something in Germany, you're paying VAT. VAT rates vary based on the product or service, usually around 19%, but it can be lower for specific items like basic groceries and books. Businesses collect this tax on behalf of the government and then remit it. However, businesses can reclaim VAT on their purchases. reducing their net tax liability. Navigating VAT can be tricky, especially if you're dealing with import-export operations. There are numerous regulations regarding how and when VAT should be applied and reclaimed. Businesses often hire VAT specialists to ensure compliance and optimize their tax positions. Now, let's talk about two more unique aspects of the German tax system: the solidarity surcharge and the church tax. The solidarity surcharge, often referred to as SOLI, was introduced in 1991 to cover the costs of reunification. It's an additional charge levied on top of income tax and corporate tax, generally around 5.5%. Although there's been talk of reducing or eliminating this surcharge, it still stands as of now. The church tax is another interesting wrinkle. If you're a registered member of certain religious communities, you'll pay an additional tax. This is usually around 8 to 9% of your income tax. While it might seem minor, it adds up and can be a surprise for expatriates and newcomers. Filing your taxes in Germany is not something you want to procrastinate on. Germany takes tax compliance very seriously. The timelines are strict, typically requiring tax returns to be submitted by July 31st of the following tax year. Failing to file on time can result in penalties. And no, they're not just a slap on the wrist. Delays can lead to hefty fines or even criminal charges in extreme cases. Thus, many people use the services of tax advisors and financial consultants. These professionals can help ensure that all forms are filled out correctly, deadlines are met, and opportunities for savings are fully utilized. Navigating the German tax system can be full of challenges. Understanding local laws, keeping track of varying tax rates, and ensuring compliance can be overwhelming. Common pitfalls include misreporting income, missing deductions, and misunderstanding tax classes. So what can you do about it? Here are some real-world tips to keep you on track. 1. Seek professional help. Always a good idea if you're unsure. A tax advisor can be invaluable. 2. Stay organized. Keep good records of all your income and expenses. 3. Regular reviews. Do periodic checks to ensure all filings are up to date. 4. Software solutions. Use tax software designed for the German tax system. Case studies can offer practical insights. For example, a freelancer who misunderstood VAT reclaimed only a fraction of what they could have. After consulting a tax advisor, they optimized their tax filings and saw significant savings. Let's wrap this up. The German tax system is undeniably complex, with layers of regulations, varying rates, and numerous allowances and deductions. Yet understanding this system is crucial whether you're an individual or a business. We've covered the main types of taxes, from income tax and corporate tax to VAT, solidarity surcharge, and church tax. We've explored the necessities of tax filing and compliance, the common challenges taxpayers face, and provided tips for overcoming them. If you're dealing with German taxes, don't go it alone. Seek professional advice to navigate this intricate system efficiently. And remember to subscribe to our channel for more informative videos on finance, the auto industry, and much more. Stay tuned, stay informed, and make your finances work for you. See you in the next video.